Hey everybody, I hope you're all doing well. In today's video, I'd like to talk about choosing timeframes. This is something I haven't really touched on too much in the past. I've left it up basically to personal preference, but today I'd like to give you some examples of what timeframes you can choose for your trading plan and why they should be chosen and the importance of all of them, okay? So let's get right into it. In front of me, you can see that I've written a bit of an example here and an explanation behind the timeframes. So let me just read over it and explain a little further. So choosing timeframes. My recommendation is to choose 2 to 3 timeframes. And the most important part of this is knowing the purpose of each timeframe, okay? So many of you might already know these little acronyms here. HTF means higher time frame, MTF is mid time frame, and LTF is low time frame. So first of all, the higher time frame. A higher time frame is for gauging trend direction and major POIs, points of interest, right? The mid time frame is for refining POIs. Now I wrote here optional because it is of course optional. There are many traders and specific trading strategies that only utilize 2 timeframes, and you'll see that in some of the examples below where I've provided some insight on what timeframes pair well together. But it's completely up to you. Like some people use 2, some people use 3. The main point here is to not overcomplicate things. We don't want to have a list of 15 timeframes. It's completely ridiculous, and that's an easy way to confuse yourself and get lost in the sauce, basically, of all the different variations between the time frames. So if you just choose 2 to 3, you will be well off, okay? So 2 is fine. 3 is more ideal to me, to be honest. I've been testing with 2 and 3, and I do prefer 3, but that's just me, right? So the mid time frame is for refining the POIs that you should ideally be finding on the higher time frame, okay? Now, the lower time frame is pretty self-explanatory. It is used for additional refinement, so further refining the high time frame and mid time frame POIs down to a lower time frame. But most importantly, the low time frame is for executing trade entries. Okay, so I've written a few examples down below. Now, the first few are examples of 3 time frames going together. So for example, this is what I've been using lately, the 4-hour, 1 hour, and 15-minute timeframes. You'll see that in my top left corner here on TradingView. This is what I've been utilizing most frequently. So we've also got 4-hour, 15-minute, and 5-minute. So basically your entry time frame would be the 5-minute. That's for really refined entries, tighter stop losses, and typically shorter durations of trades. And then we've got 1 hour, 15-minute, and 1 minute. Keep in mind, guys, these are just examples. Like they're just suggestions, right? You can pair any time frames together as long as they fit the criteria listed above right here, right? The high time frame must be high enough to gauge trend direction and major POIs, okay? It needs to give you the bigger picture of the market. So for me, that would be 4-hour time frame. I like that as my higher time frame. Some people use the 1 hour as their higher time frame. So for example here, the 1 hour is the higher time frame, the 15-minute is the mid time frame, and the 1 minute is the execution time frame, right? And then we've got some examples of 2 time frames being paired together, the 4-hour and 15. I was trying that for a while. It was really good, but I just added in the 1 hour just to get a more refined perspective on things, because sometimes the 4-hour is very difficult to find proper POIs because the candles are so big from time to time. So I just added in the 1 hour just to give myself a little bit more refinement, and it provides me a clearer picture in terms of trade ideas on the 15-minute time frame. So another example here is the 1 hour and the 5-minute time frame, and then we have the 15-minute time frame and the 1 minute time frame. So just to clarify once more, these are just suggestions, okay? You have to test these or test your own variations. You could use the 30-minute time frame. You could use, the 2-hour time frame instead of the 1 hour time frame. Like, it's all up to you. These are just the ones that make most sense to me, and these are the specific time frames that I find to be most clear when it comes to the price data on the charts, okay? So I hope this was very clear to you guys. Now, since we've gone over all this theory, basically, I would like to actually dive into a recent chart example of a trade that I'm actually currently in. I'm holding it over the weekend, and it is a trade that I sent to the Discord community as well. So we're going to go over that trade and my analysis on that trade to give you guys a good example of how I utilize the 4-hour time frame, the 1-hour time frame, and the 15-minute time frame. All right, so let's dive right into it. All right, so we are looking at an existing AUD USD short position that I'm currently in. I'm holding it over the weekend, like I said. Now, I did send this to the community. The analysis was provided, but for the purpose of this video, we're going to go over it in detail, okay? So I'm currently on the 15-minute time frame, and this is just to show you the actual entry itself. It was based on this very refined supply zone way to the left here on my chart, okay? Price reacted nicely to that zone. In hindsight, of course, I should have targeted the 50% of the supply zone, but it is what it is. We're still in a profitable trade, so it's all good. Simply targeting the demand zone as well on the 15-minute time frame. But now that we've seen the more macro perspective here, the more micro perspective here, let's go to the macro perspective. So let's go to the 4-hour time frame. I'm going to hide the position just so it's not all cluttered and in the way. So let me zoom in. Okay, so let's take a look at obviously the trend direction and the point of interest, right? The first thing I mentioned about the higher time frame is to gauge trend direction and then gauge your higher time frame points of interest. So the overall trend direction is obviously to the downside. It doesn't take a lot of skill to understand that we're moving down diagonally, right? Like it's a bear market currently. So in terms of a POI, a point of interest, we could certainly highlight this bullish candle prior to the influx of bearish momentum in the market. Okay, so important note here, just a little side note. This bearish move here didn't necessarily break swing structure. We obviously have not surpassed this major swing low right here, right? We didn't see a break of structure. However, what this is doing is creating equal lows here, relative equal lows, which represents liquidity. And of course, on a lower time frame, such as the 1-hour or the 15-minute time frame, we would have had major lows within this area here that the bearish move certainly did break through. And that's why there was points of interest created here. So this is the higher time frame point of interest, this bullish candle right here. We can just drag that zone out and we can see that price is reacting to it nicely. So let me just delete that for now. We'll drop down to the 1-hour time frame. So on the 1-hour time frame, we could have refined that 4-hour. You know what? Let me just take off the Sonar Lab indicator quickly. So we could have certainly refined that 4-hour zone down to this 1-hour zone right here. So that's the refinement I was talking about. Keep in mind, this is the optional step. You don't need this mid time frame of 1 hour. I just choose to use it because it gives me a bit of a tighter perspective, right? So with that being said, we could just ditch this entirely. We could go right from the 4-hour right down to the 15-minute, but this is just that added step of refinement. So like I mentioned previously when we were on the 4-hour time frame, we have these lows here, right? This could also be looked at as trend line liquidity, which was obviously purged to the downside. I'll just get that off the chart for now though. So these were higher lows that were being formed and price broke through that. So that's basically the change of character, right? We had a bullish price action and then a change of character because we broke those lows. So bullish order flow is no longer intact. That creates this POI right here, this point of interest. So although we didn't break swing structure, which is this low right here, we still broke internal structure, creating a change of character, which then points to this supply zone as an area of interest that we could take a short trade from. So let me delete that and we'll go down to the 15-minute time frame. So this is basically the extra refined version, right? As I wrote in the notes above, the 15-minute is the ultimate refinement and then the actual execution of a trade. Okay, so this is the point where I use the SMC indicator because it just plots the zone for me. As you can see, it highlighted this small indecisional, slightly bullish candle right here. That was the cause for this massive bearish momentum, okay? So that's the zone I was targeting. Let me bring up the object tree once more and reposition that short trade. And there we have it. So that's why I entered this trade. That's literally the reasoning behind it. And that's how I utilize these 3 of my chosen time frames to frame a trade idea. Okay. So you can see how I started on the 4-hour, then jumped to the 1-hour, and then jumped down to the 15-minute to frame the overall trade idea and actually execute it. So like I said, it's really important to choose these time frames for yourself. Just given the information though that I shared above, let me bring up the object tree again and show that text. Right, so it's really important to keep these things in mind. And as long as you understand this, you can choose your own time frames and there should be a lot less confusion about it. Okay, so use this information here to frame out your trading plan, because one of the most important aspects of your trading plan is choosing your time frames. So you can use these examples or you can create some of your own, test it, figure out if you feel comfortable with it or not, and then just stick to it. Don't be constantly adding time frames. Like you can see how we have so many options here. Don't constantly be switching between them, okay? Choose 2 or 3, as I stated here, just choose 2 or 3 time frames that you feel comfortable with and stick to it. Find trades within the structure of those 3 time frames, 2 or 3 time frames, and stick with it, okay? So I hope you all enjoyed this video and I will talk to you all soon.